This is Jordan with Conquer Trading and Investing. And today, in today's session, we're going to do what we do best. We're going to put our heads down. We're going to grind it out. We're going to stay in front of it all. Make sure we stay on the right side of the trade across markets. And specifically today, we're going to go ahead and talk about what is taking place here as we are looking at a real-time revaluation of gold and silver. If you remember back early days of CTM 2020, we talked about how in our lifetime we would likely see a revaluation of gold. My expectations were that would be an overnight devaluation, much as we've seen in the past. Today, we'd wake up one day and gold would be trading significantly higher. I can't put a price on that, whether or not it's $15,000, $20,000, whatever it might be. But now it seems what we are looking at is a tick by tick, real time revaluation of both gold and Bitcoin. And we're going to take a look at that today. We are seeing definitely a pullback in alts today, and that is coming as rightfully noted. By the way, I have to highlight this because I really want to it was really interesting, Thomas, and how much I love seeing each and every one of you here as we get ready to get into the session each day. For years and years, seeing, you know what, brought a special thing that we were able to share over here. I'm curious about the June 14th, right? It says, ready to ride this cycle out. We did a great video. If you go onto the YouTube channel, you go to the live and you scroll down just a few days, and it talks about like signs Bitcoin is topping from a 4-year cycle perspective. Are you ready? And we looked at what a lot of analysts, I would say that, well, probably one of our gifts is amongst the best of the best when it comes to 4-year cycle theory and analysis is being there and being not a pioneer for sure. There were many who came before, but compared to where we are today, for sure, one of the earlier adopters to it. And we talked about where that peak looks like and how it could be as early as September. And then we gave it even extra room through December. And after that, you have to ask yourself, well, the price making an all-time high prior to the halving was one sign. Now we're looking at this cycle extending out beyond. And of course, anything could happen between now and then to go ahead and invalidate this theory that we hold, that we've entered into the early majority phase of adoption, and we're going to be seeing a much different looking cycle by the time it's over. We've already seen signs of that. Is it possible that, a lot more of the same could happen, and a lot more of the same? I mean, 4-year cycle as far as duration, and 4-year cycle as far as, I don't even want to say diminishing returns, what's become then drastically diminishing returns. But when you throw out something like because October fits well within that, but June 14th, 2026, that's an interesting one. I'm just curious where that number comes from and why. And it could the cycle peak be somewhere out into the summer of next year, right? My own hypothesis is that we get into the summer of next year and we're going to see a major difference. That major difference is going to be, this is going to be the first cycle that after, say, 600 days, it's earlier than that. It's probably closer to 500, maybe even earlier than that since the halving. But beyond 600 days is a clear marker. No cycle has ever traded above the previous. So that will be interesting when that does occur, and it's going to occur. Here we are. Yet, looking at the macro, we covered yesterday that many are predicting a bear market, and I put out the case potentially what they're missing. And you know what? We're going to keep our eye on the macro. And when I talk about our eye on the macro, specifically what we're watching right now is in past event-driven recessions, right? This started a couple of weeks ago. We started monitoring this. You would see here we are in the current episode with the red line up over here. I don't have on my magic brush, so we'll go without it right now. At least I got this nice little yellow highlighter. to help draw your attention to where my eyes are and where I'm focused. And you can see that in past event. I tried to do it again. I can't even do it. So you know what? You guys got a second? You ready for a great session? Let me go ahead and put up, I'm going to need it later. Let me go ahead and get the pointer up and make sure that we're able to go ahead and do what we need to do to be able to view and analyze the markets. And then thank you very much. Boom. And now just let me enter into ghost mode. And boom. There we are. All right. Ah, that was an appropriate holder I had over here. Why I went ahead and did that. And the reason why that was an appropriate holder is because it really matters as the Fed is expected to begin cutting sooner than later. Are you going to see something like, the lame, like, look, I think about it often, and it's rather difficult for me to come to any type of conclusion about what this coordinated government attack on Powell is ultimately all about. Obviously, the administration knows they can't fire him. And it's almost as if they're making him like a lame duck. You know that like once an incumbent president no longer is going to be holding office or has served out his 2 terms, 8 years in the U.S., and a new president is elected, he becomes a lame duck. Like there's nothing that he is going to do that's going to affect policy. And is that potentially what they're trying to do to Powell? Or are they trying to get him to cut sooner? He himself said that if it weren't for the tariffs, he would already be cutting. He believes that the tariffs are going to be inflationary, and indeed they might be. Indeed they might be. We looked at yesterday at Goldman giving the probability of a recession over the next 12 months a very high percentage, 30%. You will have poly markets, rather subdued, 18% chance of a recession. It's normally when no one is predicting a recession that you're getting close to actually a recession taking place. So what I'm focused here though is on the hard data, and we looked at where we were a couple of weeks ago, and we wanted to see over the next 6 weeks, and that's just on average in the previous event-driven recessions when you saw a deterioration in the hard data. Now, it doesn't have to be another 6 weeks, and it could be 12 weeks. We have to continue to watch the hard data. And so far, we've seen, right, inflation data last week come in below what expectations were and continues to remain rather benign. Unemployment claims came in lower than expected. We saw retail sales coming in higher than expected. And all hard data is actually coming in above expectations. So it's not leading us to believe at this particular moment that we are going to see a deterioration and potentially even heading into a recession, but it's something that we'll continue to monitor going forward. This is very important whether or not as the Fed begins cutting, which right now a lot of participants have priced in for September. Thanks, Ace. Thanks for being all over it. I was looking at this and I was saying where we are currently right now. And this was 2 weeks ago. We began looking at the data, and then I was pointing to how in past averages, it was roughly 40 days. You saw a deterioration of the hard data, and then I was showing you how that we've been following, right, inflation data last week coming in below expectations, unemployment claims, jobs data coming in better than expected, retail sales coming in better than expected, and thus far, all of the hard data is actually not deteriorating. It's actually continues to level out over here, and we'll continue to monitor it. We'll continue to watch it, and we'll watch what happens because it's very, very, very important going forward. Because as the Fed does cut, and expectations of whether or not it does happen as soon as September, or Powell, maybe in Jackson Hole, maybe Powell, he doubles down. He's known for it, and I wouldn't be surprised. And he's not wrong yet. We don't know, first of all, ultimately, what the final trade arrangements will be. You saw Japan reach an agreement with the U.S. overnight, and as the details continue to roll out, it looks to be less and less and less of a good deal. However, one thing is that instead of tariffs being placed at 10%, they were ultimately placed at 15%. And at the end of the day, whether or not August 1st is nothing more than a taco day, and if it's more of a pushback and a taco, that leaves Powell in the position where he ultimately doesn't have any clarity about what the final result will be, and he might choose to double down, to stand tough, and say we need to wait and see what's going to happen here. And if he does that, okay. Or I mean, is he gonna stand down? Is he gonna use that platform as a place to resign? All those things could happen. We'll find out. We'll navigate it, but we don't know. I'm not even sure what the symposium topic is at this particular point in time. If someone Googles Jackson Hole August 2025, let's see if they have the topic in place already. That might or may not give an opportunity. More often than not, though, I mean, a lot of people talk about how Jackson Hole is used as like a platform to set policy, and it's been done before by Bernanke, but really far and few between. The last time that we heard anything of significance out of Jackson Hole was when Powell in 2022 was like, "There will be pain." He's known for inflation is transitory. There are a lot of fanboys of Powell, no doubt, and they point to whatever. But I mean, right before the market bottomed, he called that there will be pain, and that's just another incidence of being off sides. As far as I'm concerned, I'm noticing, Ace, you're asking how the repo's doing, and I'm noticing that the Treasury, after the debt ceiling debacle has been kind of ironed out, is not out there putting out any type of new issuances. The thought would be that they need to go ahead and they need to raise the TGA. That currently is not actually happening. And maybe they feel that the market is just unable to absorb it. I mean, I can't imagine why else they would be doing that. I'm looking for if I have my TGA, and I don't have the repo up right now, so I don't have it up where I could find it very quickly. So, and then you see obviously, or the initial reaction where U.S. bonds reacted favorably. Let me go ahead and there's your all Riot. A lot of people watching what's going on with Riot. We were checking on that at the end of yesterday's session. Um, you could see that initially overnight bonds continue to extend bid and now actually well, they continue their coil, and that's again, we could come towards the top of the range, we could come towards the bottom of the range, but ultimately we continue this massive consolidation and coil, and likely it's going to lead to a big move one way or the other, and or including a liquidity grab that could catch a lot of people off guard. The dollar continues here its sell impulse, the current sell impulse that's underway. And then we've been and have our eyes on yesterday, watching what would happen if this like very aggressive breakdown were to occur on alts. It's now underway. And to be honest, I don't know what happens next. We came to and all the way up here, he said if we break out, then likely we would see the first move right into where we bottomed out on Bitcoin dominance. And from here, I don't know if we bounce. I don't know if we set up some type of consolidation before, like something like this occurring, before ultimately making another leg down. I don't know whether or not, though. I mean, look, a lot of degens are very quick. Breakout, and then if you did take profits over here, it's a phenomenal trade. Right now, you'd be looking to re-engage. There are people out there that might be looking to buy the dip, and the best thing to do is at least wait for a repair. You can see over here on, again, this is a short time frame. We're looking at a very volatile market. And right now, the earliest sign of a repair would be a break of buy impulse above that. And that's also very, very, very aggressive angle. But we're seeing the volatility take place. We're still holding onto our positions onto our alts over here. And you can see that, and you can see the magnitude of the move. Solana on entry is up 20%, and now is pulled back about 8%. It's very quick, but I have to say, from like, it still looks like it's well within being healthy. You know what? Like, people talk about alt season and whether or not this is alt season, and a lot of people believe this is alt season, and the mega breakout of total three versus the US dollar is definitely something that's very bullish. And I don't know why my session's disconnected. I don't like when I see that. Trading View is just, I'm looking around, and my other computer's here, and sorry about that. That's not fun stuff, but this is what we're going to deal with today. You know what? This is like the markets. This is life. You're throwing curveballs all the time, and it's how you adapt to them, right? You got to be able to be fluid and be able to go with it. So I wanted to jump back over here and look at this with you, and we were looking at dun, dun, dun. So remember, expectations were that if we broke out over here against Bitcoin, we would see a sharp move up, and then that would likely be faded. That's just what we said, right? And here you could see it's actually happening. And you know, I'm more of an observer. And what I mean by that is, if I see some type of bearish consolidation occur, right? Where we see this massive leg down, and then we see like some type of bear flag develop and then break down, that for me is going to actually get me more bullish on the extension of the altcoin move that we're currently looking at. Again, my own belief is that outside of a major adoption event, I don't think that Bitcoin is going to really, why we could see fluctuations, and I'm talking fluctuations more along the lines of this, right? Here's a big move down, bear flag, continuation, massive consolidation, and then another move down. And yes, on a smaller scale, that is what I'm looking for here. Here you could see a major move down, what looked like a bearish continuation, and it broke up to new highs. That is, again, you're making an observation in real time. And when that occurs, what does that say to you? That says to you that right now the momentum towards Bitcoin is very, very strong. Same premise occurs right here, right now. We know that if we break down below here, the next leg is coming down. If we get a continuation here, there was no continuation. If we get a continuation, that's going to suggest here that the move is strong. Maybe what's setting up is actually alts looking to outperform as Fed begins cutting rates into what is not a recession, but into normalization. And as Ace was bringing up, eventually they're going to stop QT. And when they stop QT, that brings us back to October 16th, 2021. Get prepared for a rate shock in 2022. Bitcoin will not be immune. The Fed is going to wind down their easing, their quantitative easing, which is tapering, right? And when you begin tapering, that's actually to begin to tighten. And here, when they stop quantitative tightening, that's the next step that they have as far as easing. So that's maybe what we're seeing unfolding before our eyes, and that's what we're watching. There are select all people, are a lot of people beginning. You could see it through a lot of questions and comments out on the YouTube videos. And by the way, let's continue over here. And Cardano also, I mean, nice breakout retest, massive move up. It's been a jolt down. I'm waiting for one of the signs that I like to see, that the waters are getting a little bit more, let's say, frothy. People are taking a lot more chances, is when you do see in this strong move up we're seeing, and then you see bleeding red, and that bleeding red gets faded because and a lot of people, right, they get whipsawed in the wrong way. But when you start seeing those green double digits occurring, and then a red day getting faded, that's when you know that there are buyers and there is strength, and the move has something to it. What would be an early indication here that Cardano is getting ready to break down? We're pretty close, but again, much like Solana, we have a little bit of room, and I think that it's pretty aggressive. I'm looking for where an underbelly would be. That's up over here, right? You can see that's where we began to form support. Ethereum still looks very, very healthy over here. And you can see, unlike Solana, unlike Cardano, it continues to consolidate very well. It's very far from exiting this trade and is going to continue holding over here. And the question begets, are we headed towards some type of chop and consolidation? Expectations were set on Friday when we asked the question, have the markets come too far too quickly? Right? And we talked about how we were now entering into a period of flatness, seasonality wise. We have been towards the top deviations of all seasonalities out of the 20% drawdown, continue to remain there, but we are entering into a period right now as we begin entering into earnings, of a little bit of unknown. Now, coming out of it, we still have September. That's also a period which historically is a little bit fuzzy. I'm hoping that by the end of the end of September, early fall, we begin to be able to have a lot of clarity that helps us here gain some momentum. So a lot of people have been asking about now, like, what altcoins, what small cap altcoins, and like the way that I view it is you're looking for the sweet spot of the wave. The sweet spot, right, is when like it's the easiest. And the time to really get like, I can make the case too that right now you're seeing a little speculation take place. Look at the Russell. It's up 1% as the Nasdaq is currently flat on the session. And we've been seeing a little bit of squeezes coming out of meme stocks and short squeezes. And I can make the case that there's a little bit of speculation to be had right now, and a little cautious on big tech ahead of earnings. Remains to be seen. This is a pretty clear indication of when we would put in a sell impulse that could take us back towards what is the all-time high, and a retest into there, or we continue going on. Just watching, just again making observations, and I'm trying to bring it back into the speculation and all coins. And a lot of people are like wondering, what are some potential small cap altcoins that they could get, what that look attractive. And the way that I view that question is look, I personally don't believe that leverage of any kind is needed whatsoever. I believe it's really dangerous, and it's not needed when you're talking about the type of returns that we're looking over the long term with consistency to compound into. However, I mean, right now, I like, and I mentioned to it yesterday, I liked the analysis that Ben over at Into the Cryptoverse was giving. And as you all know, like, Ben was a proponent during this particular phase of the cycle of Bitcoin dominance. And now he's shifting in real time, and he's talking about Ethereum dominance versus altcoins. And I think it makes a lot of sense. It's why I'm highlighting it. And you could see the outperformance currently on Ethereum, right? Compared to where we are, finally seeing some nice alt entries occurring. But I would take a system, a proven system, back-tested system, forward-tested system that over time has a significant edge. And if I was a degen, I would be looking to put a little bit of light leverage behind that, rather than just trying to fish out there on some type of like random alt that, if market conditions were able to align, are going to see a nice pop and all that. It's, I don't think that we're in that sweet spot right now, and I think we'll get there. I just don't think that that's where we are today. Like, this is not alt season. In my opinion, this is not alt season. And when I say this is not alt season, I could also say, well, we've been riding like we were very, very well, we're riding the wave here on alts. I consider Ethereum an alt, but definitely Cardano and Solana. And we picked it up from a discretionary view as it was occurring right before it occurred in real time. we did that video about the alts right ahead of what wound up being the breakout. But to me, this is not alt season, nor what alt season looks like. And I would love to see for a confirmation that we're seeing, like, yeah, I'm not a horizontal guy, but once alts are making and continue to push to new all-time highs, beautiful. We're not there yet. We're not there yet. Would love to see. This was a massive lag up, but look at the breakout to new highs over here. Look at the breakout over here to highs over here. And we're not seeing that yet occur. And we're into a bunch of supply. So there we are. I think that when we saw the launch of the Ethereum ETF, you did not see initially any flows into the Ethereum ETF, which we're now just beginning to see. And I think that is significant. And it looks like that why there's a lot of speculation that continues to occur in Solana. I like in the past when Ace was bringing up all of the building taking place on Solana, but as price was moving up in early October, let me just go down to where we live on the 8 hour, and I'll come down to 2020. As this like mega price appreciation was happening, there was a lot of buzz around Solana. And then since we've been watching how Solana and Ethereum in that cross has been favoring now Ethereum. So I'm gonna come over here. I can pull up. Oh, look at that. So here we are. Here's where we left off, and we were on the breakdown of Ethereum. Look what happened then. We had left off this, what would be the first earliest indication of a change, but all we saw was a move into that broken support, potentially now holding as resistance. This is the line. If we get above that line that I'm highlighting, which is above that broken support, so you make the repair of the support, you make the breakout over here. That's when I would become like bullish on Solana over Ethereum, if that were to occur. And, could something like the Solana ETF trigger that? I'm going to say likely Ethereum will have the edge over here as flows are just beginning into Ethereum. You're seeing, obviously, Bitmine, Tom Lee's treasury company beginning to take big positions into Ethereum. Is that going to be ultimately copycatted down to Solana? It looks like it for sure, that I believe that will happen. But it seems that right now Ethereum does have the momentum, and I'm not sure whether or not you would be whether or not you'd be too early. I'm picking up on this question late, so I'm going to have to just jump back and just assume that you're talking about maybe something like the current Solana trade, and we don't move our stop loss to break even. I could say on another $13 move, we would be getting ready to exit this trade. It looks kind of exactly where I have the trend line over there from a discretionary standpoint. The stops on Cardano are extremely, extremely wide. We just have to wait for momentum here at this particular point in time. And why Ethereum would be exiting if price just collapsed down all the way down here and we would give back a lot. We tend to give back a lot on Ethereum. This is not really fair. This is not really that far of history. Let me just show you to give you what that means and looks like. And as you get, it's pretty good drawdown and return. So here the run up was 63%, you book 48%. I'm going to go back to like a little bit earlier where we have some really big gain. I get 77, you'll book 52. 54, you book 40. 37% run up, you book 27. And here's a low one, right? This one was up almost 30%, 28, and you gave back 50%. That's kind of where we're at today, and that could happen. But the truth is you don't get to book these type of gains. Here's 58 and 45%. And if you look at what the risk to reward is, with the average winning trade at 27 and the average losing at 2.7, so it's a 10-to-1 risk to reward. You don't get that by cutting your winners short. So we give it room and we allow it to be able to give back some of its peak profit, right? It's never gonna, we don't exit at the top over there. Moving back and taking a little bit of a look at what's going on. I'm just reading a little bit of comments right now in the process as well. Stocks right now, we saw that MicroStrategy is under a bit of correction. Across the board, we're under corrections on our stocks over here. Let's take a look at Doggin Nation's CTM algo dashboard. And I love that the new addition for today showing what today's gain or loss is. Look at Cardano giving back a massive 8%. And I'm going to jump down to stocks really quick. And I mean, initially I'm like, why is Nvidia here holding on to gains? But it had a rather large sell-off yesterday and closed at the lows. So it just gapped up a little bit. I'm looking here at FNGU holding an open position minus 3% into profit. Everything else is into profit, with TQQQ leading the way at 30%, followed by NVIDIA at 18%. Then we're looking at IBIT 7% and MicroStrategy giving back a lot of gains here, now just under 3%. And Tesla also showing some relative strength today, over at 3%. And we are holding these open positions, and we're holding them into a period where we're a little bit uncertain about what comes next. And I point to the seasonalities, and for sure we could enter into some chop area. If we don't, if we're entering into a period that you would believe has flat to choppy sideways price action, and we continue to show relative strength, that's just a read we could take away from the market. Is really really beautiful. Ace, could you tell me where you were looking back so I could go and get on the table with you? The short answer here is that the template overall after the FNGU changes is still perfectly intact. The question is just on the last entry. And the last entry, obviously, we knew taking it, or I said taking it. You could see is very late. I think it would have entered roughly on the same day TQQQ entered the trade on that gap up, right? And after that gap up, it would have been entering over here. And had it entered without the change of ticker and whatnot, currently we would be riding a beautiful trade, right? 37% into profit. And in entering that trade, I knew that we were entering late, except that this is when our system suggests we should be entering, and that's it. And at the end of the day, I mean, our best performing template out of everything. And if it was a loss, then we're back on track going forward after that. Tesla and another who else? I saw another big, I believe, tech earnings as well coming into the day. All right, let's jump back. Let's continue. Let's get the conversation going. And as we do, like, come on, everyone, show some love. I'm glad you're here, bringing the good vibe in the morning. Hit the like button, though, especially if you are here right now on the live. We give so much love to the replay crew for good reason, but everyone here live, it is Google. Thank you for that. Thank you for that. I'm trying to just move this over. There we go. Yeah. So, hey, listen, that's going to ignite FNGU one way or the other, right? When you see Google coming out there Tesla coming out there. I'm trying to get this over. It's not going, but that's okay. We're just going to keep going. And what I want to get into today is, at this particular point in time, the theme of today's session, and that is the real-time revaluation of gold and silver. And it has a lot to do with yesterday's conversation. Yesterday's conversation was and had a lot to do with the move towards fiscal dominance, taking precedence over monetary policy. And we talked about, or I've talked about in the past, a place that I begin to get bullish on gold is when the Fed begins hiking rates. And the reason for that is because as the Fed begins to engineer a slowdown, which is what they're doing when they begin hiking rates, is that eventually you do see the slowdown come to fruition. And then that's like gold's time to shine, right? During that particular period. And sure enough, we're right on time once again. We called the super cycle gold breakout in March of 2023. And actually, it wasn't such a good call. And I will not make that mistake again. Jordan, what are you talking about? Gold is up immensely since then. Yeah, but we did call the breakout from the cup and handle right on time. But this is when disinflationary pressures finally began to take that paramount um, 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 dominance. And once that happened, is really when gold began to shine, and that's when someone missed it. Just go to the YouTube and search gold, and then you'll find the video that we did with the breakout of the cup and handle. And what was awesome about this video, right, was that March 2024. That's when you'll find the video. And what was awesome about this was that we said, as gold is at 2000, and so many people had seen over the recency bias, so many people have seen the rejection at this level by gold, that many people, not the gold bugs, not the people who like were extremely like not the gold bugs, but a lot of people thought like, oh, this time is going to be more of the same. And we said, listen, we're not going to stop at 2,500, and I'll see you at 5,000. I mean, we've come a lot further, a lot quicker than I imagined and or expected, and nothing has changed. I said one thing that could change that analysis would be if we entered into a period of growth again. And now what I've been relaying to you is that it looks like, as the government's been very vocal about, forget the Doge, we're moving towards running it hot. And they're going to do everything in their power to go ahead and run this as hot as possible and try to outgrow the death as best as possible until they ultimately fail. And then soon thereafter, the printer runs again. But in the foreseeable future, right? And we could definitely say, well, we can definitely, can't say definitely about anything. It's the markets, Jordan. But over the next, through the midterms here, we should have all green lights and begin to really be engineering some growth. What does that do to my view on gold? And when I look at this chart here on the monthly, it's amazing. You know what? The track record of Kramer is uncanny. It's almost like he's there to engineer exit liquidity, and it's unbelievable. But the truth is, he's not always wrong. And you come down to this period over here, and this is when people like Aldo joined us, right? Because this is, I just draw some lines on a chart and I manage risk around it. And I had this line on the chart, and I'm like, oh, I'm going to close my eyes here because I am as bearish as everyone else. And that was the first breakout. And then what happened after that was really interesting. I'm going to show you. And then after that, I presented this chart, right? And I drew another line over here. And I drew a line like this. And I didn't tell anyone what this chart was. I just presented this chart on without a ticker, and I presented it on Twitter. And I said, if this line breaks here, we're going to waterfall down. And everyone who saw this chart completely agreed. That looks very bearish if that breaks. And then sure enough, it did break. And sure enough, we did waterfall down, right? We watered fall down. And then when I let everyone know that was the NASDAQ, everyone's own opinion was contrary. They were very bearish at that particular point in time. But right over here, what happened was interesting, right? And somewhere in this area, you could find it easily by searching Dr. Michael Berry sell, when he tweeted one word, sell. And at that same particular time, Kramer said, we're going to have a NASDAQ melt up. And Kramer was right. And not only was he right, I mean, look where we are today, right? I mean, compared to Michael Berry, he was right. I don't know where it was. I'm going to go with here in April, right? And I mean, some could say that that's been a melt up, and Kramer has been like that's. Look, we call it as it is. That's one case where Kramer was extremely correct. And, is he correct about the Bitcoin and gold being hedges against government debt? Absolutely not. He's absolutely correct about that. And not only about government debt, I mean, it's also a clear hedge against the US bond market. And I love seeing things that are taking place as an American, such as the engineering of stable coins to go ahead and be able to, in that future, provide a bid into the US Treasury market. Because without that, this would get nasty quickly, and that's bad for everyone worldwide. Everyone talks about, the implosion of the dollar, but no one's prepared for what that would actually mean if that happened quickly. And, nevertheless, you are seeing for sure a lot of countries such as Russia, such as China, who used to hold a lot more US treasuries, they are diversifying. They're diversifying into gold, as well as central banks across the world continue to do that. And they hold a lot of gold. Gold is not going anywhere, and it's going to play a much bigger role as we continue to move forward. And so will Bitcoin. And the thing about Bitcoin and gold is that gold's market cap is 10 times the size of Bitcoin's. So obviously the appreciation of Bitcoin in relation to gold is going to be much greater, much quickly. I don't think he was lucky, and in real time, fair enough. In real time, I pointed out how, because his analyst matched ours. I'm not concerned with his. I was concerned with what ours, and we were ahead of just about everyone. Not everyone, but ahead. We were really ahead of the herd. And he put out something. Michael Berry. Everyone's like, "Oh, Michael Berry. Oh, this guy. He was in the Big Short." And this guy was. I mean, embarrassing how wrong he was, no doubt. And is that a case of a broken? I personally think this. You ready? Here's what I think about Kramer. I think that he probably has a wealth of market knowledge, and I think that he must be paid exit liquidity. Like the amount of times he's mentioned a company, and the next day that company has basically gone under is unreal. It's not even possible to do. It's not possible unless that is some type of insider manipulation going on that could happen. So that's my only explanation of how bad his analysis could be. So I mean, that's likely what's going on, or that's what I imagine is going on. Um, we went off on a bunch of tangents. Let's keep going and let's get into. By the way, silver today, $39, making a 14-year high. Absolutely loving that, and we are moving towards $50 an ounce. My expectation might be wrong. My expectation were on this breakout, right? That we were on this breakout over here above 30, if we were able to hold it, that we're going to be headed and walk up towards 50, and that it would be later on down in the cycle that silver's able to make the breakout. Continues here to be running strong. That there was a massive update by TradingView again, and they seem to be pushing out updates more and more. If your CTM strategy is not working, do one of two things. Go into indicators here, and then from indicators, go into invite only. And the indicator that's not working on your chart, for example, if it was Bitcoin bull runs, go ahead and click on it and add it to the chart, and then it will be working. And then just X out, remove the other one. Or you could alternatively let me know which one it is in the Discord, and then I could go into the dashboard and I could do the same. I'll just go ahead and add it to the chart and save it there, and then there will be no issues, and you'll be able to see it again. But do that. Go into indicators, go into invite only, just re-add the indicator. It had something to do with whatever trading view did, and that will fix it in an instant. Otherwise, just go ahead and let me know which one it is. He is a showman indeed. In gold, let's take a look at what's going on in gold. Everything's getting, so everything here is getting hit today. It's not just the altcoins here. Everything here. A lot of things under pressure, I should say. Just everything. So I want to go back over here and talk about how long the RSI has been overbought here. And it's very unusual. And is this the case when overbought's going to continue to remain overbought? I personally am hoping for a pullback and a pullback towards, at least $3,000. I don't know if that's going to happen, but eventually this will put in a place where it goes to consolidate and or pulls back. And then we're going to be looking for this to continue once it breaks out the current high. You know what? It's hard for me. As someone who, gold, silver, I've embraced them for a long time. We use the silver coins to give to the kids. I don't. It's hard to make the case of why you'd want to be allocated. You don't believe that? We do. It's an amazing lesson. If you give a silver coin to a kid, right? Lose a tooth, and then what does that do? Well, oh, do you know how much that's worth? That's worth $25. The heck you giving $25 for a kid to a kid for? Well, we don't give any type of allowance ever, anything like that. That's expected. Like you help out around the house. That's you don't get allowance. You don't give. There's no government handouts over here. That doesn't happen. But a way to teach kids about money, and more importantly, hard money, is that you lose a tooth, like, oh, that's worth $25. And then, over time, as the devaluation of fiat continues, and that's worth 39 today, years later, you're like, oh, each coin now is worth 39. And I can't wait to the day it is trading at 70. I'll be like, that's worth 70 now. And then that is teaching kids a monetary lesson that they're not going to get anywhere else. And it's a lot better than giving kid a weekly allowance, and which is great if you teach them, you know what, here's how much money out of your allowance you're going to save. Here's how much money out of your allowance you're going to invest. Here's much money out of your allowance that you're going to save to give towards those in need and to charity. And here's how much of your allowance you get to spend. That's an amazing way to teach kids about money as well. I fully believe that. But the thing about hard money, and obviously I'm a hard money advocate, and silver at 70, I would love to do this. Or I mean, I think it's going higher than 70 ultimately. But let's say it's at 70. You could be like, oh, do you know that a silver coin is now worth $70? You had it from 25 and now it's at 70. Imagine this dollar is still worth $1, and it actually buys less than when you first got this silver than it does today. You can now get a pack of gum where it used to be 50 cents. But then I say, do you want to exchange your silver for Bitcoin? And then if they're interested in that and make the case for Bitcoin over silver and whatnot. Can you imagine then, you have a 17-year-old go ahead and say, you know what? Yeah, I saw how the appreciation of silver worked, and now I'm a believer in Bitcoin. I understand it. And then they exchange their silver for Bitcoin, and then could you imagine, 5 years later when they see that's an invaluable lesson. That's an invaluable lesson. I mean, any type of value given to anything is definitely man-made, right? So there is for silver. Um, I think that's an incredible lesson to teach the kid. We call it here in Mexico. It's the rat. Well, it's the mouse. I call it the rat, the ratoncito. Anyway, let's keep going. I want to go, and but I sure enjoy all these conversations with you all so much. So there you go. Thank you. So the other thing that I wanted to say though is, not only I mean, I can never had become a Bitcoiner if it were not first for being a gold bug, or I shouldn't say a gold bug, but a precious metal advocate. And both gold and silver, no question about it. And obviously there are other metals as well, and what have you. And thankfully, I was always more of a believer in gold, but love them both. And then we're looking at a situation where we're talking about the real time revaluation of gold and Bitcoin, and I don't believe that's going to stop. And I'm almost bewildered about how the RSI continues to remain here so overbought. I mean, just going back over here, you can't find another period. This might be the only other one, and that's before the peg is taken away in 74. You can't find another instance where we've remained over overbought for as long as we have. Something different is happening. We talked about in yesterday's session how that something different is clearly fiscal dominance, and how right now the only move is to keep the music playing by going ahead and maintaining these deficits. There's no other choice. And you could see the something different illustrated before your eyes over here. That's not to say that obviously at some point in time, a consolidation pullback is coming. Look, you could call this a consolidation here. Like markets peaked out, gold peaked out after QE started running. You see a lot of funds flow into growth and it was a big pullback. I don't know what it is, 30%. But in the same time, that's just a massive consolidation in the greater scheme of things. A consolidation will come. I would like to see a retest of the 70 above it or below it, and then look for that opportunity to get a black diamond in and continue here building positions. And but it might, I mean, this is we talked about every once in a while, overbought can remain overbought, or oversold can remain oversold longer than people can remain solvent. And if you're shorting gold every time that the RSI got overbought at this particular point in time, you're getting wrecked. It's like shorting something that keeps going up, and it can keep going up and you're going to get wrecked. And real estate, I want to bring back right to this conversation. The reason I bring up man-made is to say real estate has a man-made monetary value component because it's used as loan collateral, which is unethical to some extent. I mean, I'll come back to this part of the conversation. We're just going like wax poetic today and having fun. And a lot of people are looking at the U.S. Market and saying, well, the housing is in a massive bubble. And then a lot of people are thinking that inventory is starting to stack up, and that means that we're looking at a situation that reminds us of the last housing bubble, and then a well needed correction. And I can't say that I'm not in that camp. I do believe personally that there's a good chance that likely this occurs going forward. It's hard to, you could see home prices, and you could see that that it's definitely more of a buyer's market than a seller's market, in so much as sellers have houses that used to take a month to sell, now taking on average 6 months. Price cuts continue to come in, but there's been no repricing. And more so, it's so complicated because the buyers that are looking to go ahead and move and or buy, their cost of moving is so much higher because of the mortgage rates, as we've entered into this secular bond market. And we talked about, or I've talked about, how even though I still believe that, look, the printers are going to run again, and when they do, they're going to get rates down as close to zero as possible, even if that means it's going to be short lasting. Nevertheless, you look at the Australian housing market, and you would have to say this is absolutely insane. If you look at the medium housing price in Sydney, and you come back to 2005, and it was $500,000, and now it's 1.63. But what you're really looking at here is the devaluation of the currency. And I don't think that's not going to continue here with the U.S. housing market, and we've seen this happen in the Canadian housing market. And what's XLRE? Hold on one second. Oh, I was so wrong yesterday about Nail and the home builders, and I wanted to bring up for you a couple of different things. So I'm looking here first, and there's structure there. I mean, and that structure is coming off right over here, and it maintains over here. And I don't know how other people would draw a trend line. So it doesn't work. That's not the structure. So, but it does look like, to me, some type of triple head and shoulders. You could see it, right? And you can see the last time it came out of. And yesterday I was looking at the home builders, and I was suggesting that they're under a lot of pressure. And I have two bookmarks to share with you. So maybe tomorrow, it's not really that important. But if you look at the most recent breakout yesterday, look at this massive gap and run occurring over here. And I mean, interesting. Right? It's a massive, 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 massive breakout, because we were looking at the home builders and suggesting that, and the way I see it is, I think it's almost harder to sell an existing home right now than it is new construction, as well as a lot of the home builders are making it very attractive for new buyers, in so much as that they're giving them lower rates as well, lower mortgage rates, and they're just finagling ways to move new supply. Um, but we talked about, for the economy to continue to run, we would need to see a turnaround in home builders. And then we also talked about one sign that things are going south would be to see if we would see deterioration. And I guess you could argue that deterioration as, I mean, look at the massive repricing. Anyway, um, this to me has to do everything with the devaluation of the currency. I am pretty certain that what we're seeing is the beginning of a continued devaluation of the dollar. And I don't think that has anything to do in this moment with the US dollar's control over being the reserve currency of the world. And right now, dollar percent of dollar transactions making up total transactions in the world is higher than ever. And I think that that is going to continue and become even more entrenched with the whole stablecoin helping prop up or extend the life, I should say, of the treasury market. But nevertheless, the underlying will continue to be devalued. And we're looking at the dollar right now off 10% of the year, undergoing another sell impulse. And I think if you ask anyone, where do you see the dollar 12 months from now? I think that they would say on the magnitude of that lower again. You never know what happens in between. We've been trying to stay on the right side, watching the buy impulses, the sell impulses, and we continue to see that massive downward pressure. It's That's my concern about also the US housing market. And could you continue to see prices I mean, are they overbought? Uh-huh. They're overbought and it doesn't make sense and it's pricing a lot of people out. So maybe they're just going to become the like BlackRock tenants of the like are people going to be unable to afford housing, or are we going to see something like more and more supply come onto the market because of older people just like moving out of their homes, needing to sell to be able to afford their care as they get older? And are we going to see a slowdown in the job market? And is this going to lead to a slowdown in the economy? And is this going to lead to a bust? Eventually, it's hard to predict that over the next 12 months, though. And are we going to see potentially like overbought continue to remain overbought? Yeah, it doesn't make sense, but if prices are stagnant because they can't move, then until something is able to burst it, it's not going to burst. So these things I remember because I was so early on the in 2005, I was calling the housing market a bubble, which it was, but that bubble didn't pop for 2 to 3 years later and prices rose significantly more. And I know that we're not seeing prices rise in a lot of markets, whether or not it's Austin or a lot of places in Florida are definitely seeing price declines. And there's an old saying, watch the market in Florida because as Florida does, so will the rest of the nation. And there we are. I wanted to get into, and if for those that are still here, we'll go ahead and I just want to go ahead and talk a little bit further about the real-time devaluation of the dollar. I want to try to do it from a bit of a presentation stance and talk about the real-time revaluation of gold and Bitcoin, starting off with it's gradually, not suddenly, right? In the past, we've talked about this as far as even yesterday, looking at what happened in 1930, through that decade, and looking at the historical overnight devaluations or repricings. And today, what we're seeing between gold and Bitcoin is a continuous market driven process. Open market versus government, right? We saw a previous route, 1933 gold confiscation. They first made it illegal to own gold. You were able to turn it in and get $20 an ounce. And then overnight they repriced it. And then again in 1971, when Nixon stopped backing the US dollar by the gold, you began to see that rapid price appreciation as well. Now the revaluation is occurring in 24/7 markets outside official decrease. And it's not as if they're not official as well. I mean, the signaling that we're seeing from the current administration could not be any louder or clearer. We're seeing gold and Basel III, where banks are now able to keep gold on their balance sheets and for it to be counted as money. And we're also seeing with Bitcoin, obviously, the massive clarity and opening up of the markets. You're looking at now Bitcoin being able to be used in retirement accounts, for banks to be able to hold it. You're seeing a massive, massive, massive transformation. We were so early. Rising government deficits, fiscal dominance, and unsustainable debt fuel skepticism of fiat currencies. I mean, there's one certainty, and that's that all fiat in the end is going to zero. We've looked at the projections, U.S. government projections of what they expect by 2050 for government debt to be, and it's astronomical, and they always underestimate. There's no question that the rising government deficits have turned the corner, right? Now, whether or not this is like it to me, it's like a slow motion debt spiral, in so much as that these things take out a lot longer to play out than most people perceive. A lot of people have been calling for the death of the dollar since the 1980s. Where you remember, if you guys remember, the dollar vigilante, and for the last 25 years calling for the death of the dollar. And one could say, well, the bricks are here now, and I could say, you know, what share of global trade do they make up? No, the dollar is dominant. The dollar continues to be the world reserve currency, but the dollar continues to devalue. And when you look at things like the price of real estate, say, well, it's not the price of real estate is appreciating, it's actually devaluation of the fiat that's occurring. People are becoming more and more drawn to hard assets. I have friends who are like, how do I buy gold? All the time now. You did not see this occurring years ago whatsoever. Same thing with Bitcoin. A lot of more normal people are saying and realizing the importance of Bitcoin and the role it plays. Investors seek safe havens, gold and Bitcoin as trust shifts. It's happening everywhere and to everyone. Gold and Bitcoin price just in real times as millions of participants globally reassess risk, currency strength, and it's also happening in stocks, I do believe, and equities and stocks, and specifically tech stocks. They play a role in how we look to execute in the markets. We believe that the most highly probable candidates here to perform the best against fiat is obviously Bitcoin and select crypto, and the same thing with select tech stocks. And the question earlier was, what about silver futures? And I pointed out on that breakout in March of 2023, as we broke above 2000, I said to everyone, listen, I know most people that I deal with and I know are very much into Bitcoin and crypto and understand that market very well. But the thing about futures is the leverage involved. Like one gold future contract controls 100 ounces. And I would say that like what is it, like a $50 move is a $5,000 move per contract. So the amount of leverage that could be utilized in the future markets, whether it's on gold or silver, does it make sense? And I'm not saying up here. I mean, gold for me is continues to be overbought, right? And it's funny because if you remember on gold, and I think we did a really good job calling that breakdown as it occurred, but prices just flat since. I mean, yes, there was a drawdown. Um, I guess what I'm getting at is I don't. I mean, when it comes to leverage, the last thing I want to do in any way, shape, or form is kind of promote it, because it's extremely dangerous. I've seen so many people. I don't think abuse it. I just think not understand the magnitude of the tool they were dealing with, and it wound up really, really whipping them really badly. And the gains that we are able to produce methodically and consistently in the markets, they are with no leverage whatsoever, and no leverage is needed. Does it make sense in this regime to have a small paper position on in Bitcoin and gold? And up here the place to put it. But I mean, what same thing with Bitcoin? 55,000 is cheap. People didn't understand it at the time, and now everyone understands it. I mean, do you ultimately think, or do I ultimately think, that there will be a time within the next couple of years, you know, that, the gold looks cheap at 3,400? I believe that. I embrace that. I strongly believe that. As far as timing, though, right, you have micro futures as well. As far as timing, though, it gold, I mean, silver continues here to look like it's on the move compared to gold. You have to watch for where a breakdown is on silver as well. Uh, from all the way up here at 39. And again, we've been tracking this pretty strongly since the breakout above 30 and then holding 32 and whatnot. But yeah, I would feel much better into an area of support and being able to manage risk than looking to buy out. And then again, I mean, what happens on the breakout? I think it's a little late personally here for picking up entries on gold and silver. And I think that would take we don't have it here today, right? This was the last, like, this was a breakout on gold, and it's still in play, but we're above it now, and you can't chase. Look at that, Craig. I mean, that's the thank you for hitting on, like, we don't have a crystal ball whatsoever, right? And when it comes to execution, that is everything. Let's keep going. Finish it up. Incremental but relentless. The process is slow. I believe this is happening. The process is slow enough to avoid panic, but persistent enough to reflect a major regime change. And like, all of you, I think, are so early in everything, in what you do, in what you're able to perceive. Like, you are a different breed compared to quote unquote normal people out there. But I do think we're at the point where normal people are beginning to see that, wait a second, there's something going on here. There's something going on with gold and with Bitcoin. And I do not think that, I think we are in more along the lines of the early innings rather than the later innings over here. Most people miss the significance because it's not a single dramatic event. The parallel revaluation, both gold and Bitcoin are revalued together, reflecting broader skepticism towards fiat. What type of place does real estate have in there? I wonder. And a lot of people, from my perspective, are beginning to understand. A lot of people that used real estate to generate income through rental properties are realizing that the maintenance costs, as well as the 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 occupational cost, I'll say, like dealing with tenants or guests or things like that, is really, compared to something like Bitcoin. A lot of people are like, "Oh, does Bitcoin have any type of yield?" Like, we go back 10 years ago, go back 5 years ago. Today, people are understanding that yield comes at a cost. It's not worth it. Since there's no announcement day, the average person underestimates what's happening. I think that this stands for us too. I'm going to highlight this right over here. I think, as aware as you and I and all of us are, I still think we underestimate what's happening. And I think, and I've been trying to sound the alarm about what I think is going to happen with Bitcoin, as a lot of people are looking for the peak and the market top and to exit so that they could, like, 4-year cycle, recency bias. There's no difference between the recency bias up here in gold on the breakout right over here. Like, oh, gold to 2000 again, time to sell, right? And I believe, unfortunately, that a lot of people in 2026 are actually going to get left behind. You all understand how there are certain participants that get left behind as far as tying themselves to altcoins and looking for that quick way, that sharp appreciation out of alts, so that they could stack more Bitcoin. And I think that that could happen here with Bitcoin if, unfortunately, people look to time the cycle and look to time it not from a systematic, mechanical way. And thank God for Bitcoin bull runs, when to be in the market and when out. I don't have it right here, so I'm not gonna pull it up. But here we are. Yeah, I think that this becomes by 2000 by the summer of 2026. I think that it's undeniable at that point, and then everyone will have embraced it. The question is, and if we get some sharper appreciation, which I'm not, then that kind of opens up the door for more and more people to maybe make a mistake. That's a good place, I think. I don't know if the problem is I don't know if we get it. I just don't know if we're going to get the opportunity as you look at silver into here, and right, because if you wind up moving towards, I mean, do you think we get a break above 50 initially, or you get into that wobbly, or I don't know if we're going to get it or not, but I can't imagine chasing it here. I mean, this is one of the most important things I think to also consider is, like, we are seeing the disinflationary forces continue to take hold. And if those become deflationary forces, that is a recipe for disaster. And you could see, right, over the past few years, the massive, people used to always be like, the Chinese housing market, it only goes up, and that's a risk. And a deflationary bust is scary to me. It's really, really scary. And I think it would be much more devastating than inflationary spiral that we're currently under. And I don't know that how easy it would be to get out of it. It wouldn't be easy at all. This is the problem. Yeah, I agree strongly with you, except that I also don't like silver. To me, 12 months from now is higher. I like significantly higher. I believe that. I think that. So I mean, my view on this is different. I don't. I think very clearly that if we move towards here, and I could show you this chart, and I could say that I believe, my strongest belief is that in the market, that between now and January 2027, you have likely, not likely, you have potentially the possibility to pick up Bitcoin much lower, and as low as 60,000 and rising. But I believe after 2027, after January 2027, that you will not have, the likelihood would be extremely rare. I don't think you're going to have the possibility to pick up Bitcoin below $116,000. And there's nothing to suggest, like, what also could happen. There's nothing to say that the bottom of this channel won't break. And if that happens, and what I deem as the sustainable channel, like, if it continues to go over here, so that this is January 2026. Is that the same thing I just gave you? I don't know why that's happening. That's a year earlier. So there you go. Sorry. So I'm telling you, like, probability wise, I don't think after January 2027 you have the ability to pick up Bitcoin below 116,000. I don't think that's, but there's also the potential that that's not January 2027, that of January 2026, that window might have passed. And I believe that. I like, I could say the latter one, January 2027, 55 Bitcoin's cheap, 116 Bitcoin is cheap. That I attribute a high probability to. There's the potential that after January 2026, a year earlier, that is also occurs. And I would not be surprised. That's more along the lines of my projections of what I see happening. So that's the warning for people. Like, you might not have the ability in 2026 to buy Bitcoin cheaper. Now, that's not to say, like, if Bitcoin goes to 200,000 and you exit, you very much likely have the possibility to buy Bitcoin at 150. I believe that, but is that worth it to you? Right? Do you have the ability then to buy it closer to that 116 again? Potentially, for sure, it's possible, but it doesn't seem the direction adoption is headed. And a lot of people talk about the great risk right now of these Bitcoin treasury companies in a bear market. All right. And that's true. In a bear market, could there be forced sellers? I imagine so. We saw Germany as a forced seller. How much was it? Was it $4 billion worth of Bitcoin they sold in a matter of a couple of weeks? And the market absorbed it. There was a few $1,000s of selling pressure on it, but the market absorbed it. Moving on right along. And the thing is that you're going to need a bear market where Bitcoin comes off 50, 60% or more in order to put these lightweight corporate treasury companies into trouble. And I don't know that that's going to happen anytime soon. So yes, we could say that, and you could do it with the housing market. We could say, like, eventually the amount of unmoving supply and then more supply coming to the market becomes a massive problem if rates don't come down and you see a loss of jobs. And then all of a sudden, like, finally the pin pricks the bubble, of course. But that could be the same thing here with Bitcoin. And you know, it might take a lot more blowing of the bubble before we're into a situation where it's becoming dangerous. And here in the sustainable channel, I don't think we're anywhere close to it. And you can remember, because I often bring up the 1998 variation of where we are on the stock markets and on the NASDAQ over here, and you're looking at this over here, this 1998 deviation. Well, yeah, off the 20% correction, that was a beautiful running up over here 25% this year, or you could say closing up 18% on the year. But then in 1999, it ran bombastic, right? That's when, especially towards the end of that year, is when the bubble really made some of its most tremendous quick gains. And this is coming off of 2 years earlier, big gains. That's my view. And my view is that most people are a little bit stuck in the recency bias of what the past 4-year cycles have been. And then I think they're not understanding of where we are in the Fed cycle. The Fed has been tightening since over here. We are significantly higher than when the Fed began tightening, and they're just moving towards easing. Quantitative tightening is still running. The last time they stopped quantitative tightening, we were down here, which would be the equivalent of being over here. we're just still running it. We're all the way up here. And then the difference between obviously how monetary policy has affected markets then and today is that now we are looking at what is the greater growing dominance of fiscal dominance over monetary policy. And this is why we continue to put together our thoughts. And our thoughts are to keep us on the right side, to have the best awareness that we could have. Everyone, thanks for being here today. Big shout out, Silent Majority. Everyone out on the replay. On your way out today, whether you're live or on the replay, go ahead and hit the thumbs up. I'll see you all tomorrow, and we'll continue at it. CTM strong. Beautiful day, everyone.